Stanley Druckenmiller is not a TikTok trader. He's not chasing meme stocks. He's the man who, alongside George Soros, helped break the Bank of England in the 1990s and walked away with $1 billion in profit. For decades, he's been one of the sharpest macro investors alive. A man whose entire career is built on spotting massive shifts before the crowd. And now, he says artificial intelligence is one of the most important opportunities of our lifetime. He's betting big. The question is, should you? By the way, if you're new here, this is Seven Hills Equities. On this channel, we take the playbooks of the world's top investors and break them down into lessons you can actually use in your own portfolio. Before we talk AI, you need to understand who Stanley Druckenmiller is, because his credibility is what makes this so compelling. He ran Duquesne Capital for 3 decades. In that time, he never had a losing year. Not one. He managed billions, made gutsy macro calls, and built a reputation as a trader who combines discipline with conviction. Since 2010, he's managed his fortune through his family office, Duquesne Family Office, but his approach hasn't changed. When Druckenmiller sees a theme, he doesn't dip a toe, he dives in. So why is Druckenmiller so bullish on artificial intelligence? His reasoning comes down to 3 key insights. First, talent migration. He saw the smartest engineering graduates walking away from crypto and toward AI. That was his early signal that something bigger was happening. Second, the ChatGPT moment. Druckenmiller admitted he didn't even know much about ChatGPT until it exploded onto the scene. But when he saw it, and how fast adoption was happening, he realized this wasn't hype. It was a turning point. Third, the long game. Druckenmiller says AI may be a little overhyped in the short term, but underhyped in the long term. In other words, yes, there will be bubbles, but the secular trend is too powerful to ignore. Here's what separates Druckenmiller from Twitter hype merchants. He's not buying every shiny AI stock, he's targeting the infrastructure. He was an early investor in Nvidia, he later trimmed that position, and even admitted selling too early was a mistake. But the point wasn't chasing Nvidia's stock chart. The point was identifying where value would accrue in the AI economy. In his portfolio, we've seen large positions in TSMC, the world's leading semiconductor foundry. We've seen exposure to companies like Nvidia, which applies AI to genetic diagnostics, and Amazon, which benefits from AI through cloud computing. The lesson? He's not betting on who builds the best chatbot. He's betting on the shovels, the data centers, the chips, the companies that enable everyone else to play. So what does this mean for you, the retail investor? It means the smart money isn't just chasing headlines, it's digging into the plumbing of AI. Instead of asking, which AI app will be the next big thing, Druckenmiller asks, who sells the picks and shovels? Who owns the infrastructure? Who makes this all possible? That's a lesson you can take straight into your own portfolio decisions. Now let's be clear. Druckenmiller isn't a blind believer. He's talked about the risks openly. High valuations can collapse, regulation could slam the brakes on certain applications, geopolitics, like US-China tensions, could squeeze supply chains, and AI itself could disappoint in the short run. That's why Druckenmiller trims positions when they run too hot. He's willing to walk away from a stock, even if it hurts in the short term, to protect capital in the long term. That discipline is a big part of why he's survived in markets for 4 decades. So here are the takeaways for everyday investors. Number 1, look at infrastructure. Chips, cloud, power, semiconductors. Not just the apps. Number 2, don't overpay. A great company bought at the wrong price can still lose you money. Number 3, think long term. The biggest AI gains may take years, not months. Number 4, balance conviction with caution. Trim when hype gets crazy, add when prices reset. That's how Druckenmiller plays it, and that's how you should think about it too. Stanley Druckenmiller has built a career on spotting big shifts before they're obvious. AI is his latest conviction. He sees it as overhyped today, but underhyped tomorrow. And he's betting accordingly. At Seven Hills Equities, that's exactly what we do. We break down the strategies of the world's best investors and translate them into lessons you can actually use. So if you found this helpful, hit like, drop a comment with the AI stock you think has the most potential, and subscribe to Seven Hills Equities for more deep dives. Thanks for watching. And remember, conviction plus discipline wins the game.